What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol ISEE for IVERIC Bio. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. This, of course, will be more of an update. We talked about it on Thursday, really looking at this gap up and analyzing the possibilities there. And clearly, it was a gap and hold, right? It really wasn't a gap and go. We didn't get too much acceptance over that pre-market high, and we also didn't really spend any time underneath the opening print here. So the main update to bring really is that as you watch this one going forward, volume needs to remain elevated for this to have any type of momentum move up and over this. Well, this was the pre-market high here at 1478, but I would argue, and we can clearly see from the 30-minute perspective and the structure here, that's the critical break, right? Right over 1435. After that, I would probably place less emphasis on that pre-market high and then just the high of day from Friday, of course, up there around $15.54. So step one would be healthy consolidation in here. And then after that, a break of 1435 puts into play the all-time high, which essentially was Friday's high. And then after that, as we know, we are looking at blue sky territories, whole and half dollars, intraday levels that do form. So this isn't something I would just jump into blindly to the long side, simply due to the nature of the upper wick from the daily perspective. There was some selling pressure, right? But overall, I mean, don't get me wrong. The context of a massive gap up and hold certainly does strike me as bullish. It's just, why were they not able to get over this level? So that's going to be like the gatekeeper, if you will, to higher prices inside of ISEE. To the downside, if we do give up this sort of area of support in here at 1324, it was the opening print. I also like it as just a general zone from all these lower wicks. Then as you know, there's a massive gap underneath us. Now, technically, don't get me wrong, it's technically going to fill underneath the low of the day, which is right around 13 the whole dollar, but I would really just watch for that 13 quarter mark to be the critical break. Underneath the low of day, though, we are looking for a bump in the road here at 1077, and then the gap fills all the way down at 9 the whole dollar. Again, does that happen all in one day, all in 1 week? Not necessarily anticipating that at all. And also, if we just look on over at the trade tab, what you can see is that this was probably going to be hard to borrow. You're not going to short the shares here, but just expanding the options chain here, there's okay volume here on the put side. I would argue the at the monies, okay, not the best. There's some okay volume here, but we'll see how that unfolds into the earlier part of next week. I would just avoid the short side, right? The other reason for avoiding the short side would simply be if we scrunch this chart up, then, I mean, it's in a pretty solid uptrend, right? It's not like this thing has been rolling over and dying for the past couple of years, riddled with reverse splits. No, it's actually a pretty healthy chart overall from a longer term perspective. So those are my 2 cents on that perspective there to the short side, right? Probably just avoiding if we do start to move under 13, that nice round number. So those are my thoughts. My action plans, 1435 line in the sand to the upside. After that, really watching for blue sky territories. So if you enjoyed the video, if you learned anything new, certainly let me know down below in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.